Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio. Today is August 5th, 2021. Whew. Mortgage rates spiking, stock market actually going up, jobs reports all over the map. We're going to go over all that and more when you come back. Don't go away. Okay, this is going to be short and sweet, guys. Mortgage rates are going up. The jobs number, okay, so let's retract to where we were basically on Monday. If you go back to Monday's video, I showed a clip of one of the Federal Reserve people talking about saying, we have no plans on doing anything in regards to tapering or anything, the rates or anything like that, until we start seeing the jobs numbers hitting 1 million jobs added each month for at least 2-3 months. We're starting to get a little consistency. Well, yesterday we had that jobs number come out and it was dismal. And it was from ADP. Well, ADP lately has been about 300,000 jobs off. So take that for what it's worth. But it actually pushed up mortgage rates pretty big in the morning, and then it offset during the day. And then today, some numbers came in, and the rates are just, the mortgage-backed securities are basically crashing. I won't say we're not in crash mode, but we're down over 20. So we have been scrambling all morning, and especially early this morning before we got a rate revision of rates going up. So if you're with us right now, we got you locked. If you're not with us and you're with somebody else and you're not locked, please make sure you call us to get a quote, because I've been pleading this. Guys, when this thing turns, even the Federal Reserve said, when it turns, it's going to turn fast and hard. So that's what's going on with it. So let's get to the nitty gritty. What do we see right here? Well, the headlines are saying the Fed will crash the markets if they increase mortgage rates. Okay, that's the consensus vote out there. I'm a little, optimistic or pessimistic on that. I'll go in more details on a lot of this information tomorrow. I apologize. I'm playing scramble mode because I'm backlogged to work on a lot of clients this evening. Friday's job report is going to be a wild card. Okay, this is tomorrow. We don't know what it's going to be. The ADP number is saying one thing, other numbers are saying some other things, and we'll get to the economic calendar here in 1 second. But let's see what happened to the mortgage-backed securities market today. Okay, this number, what we follow here, and this is why people follow me, what's going on with mortgage rates? It's not the 10-year Treasury. It's not the Federal Reserve. They don't control the mortgage rate. They control on how much they're buying of this bond. Okay, so this is what's happening to the price of a mortgage-backed security, a bond that trades on Wall Street. That is the biggest factor with your mortgage rate. Okay, here's what I hate to say that I was right, and I almost nailed this to the button, is I've been saying, guys, we have a nice rally here, okay? When we peaked right here, I'm like, okay, I'm predicting this being a top. I think we should be trading in the 101.8 handle right here. If you don't believe me, go back to my videos for the last 2 months. I'm not one of those that says, oh, the stock market's going to crash, and then 5 years later it crashes, and they're like, I told you so. So I'm a great analyst. No, guys, I do my due diligence on this. I pretty much think I know what I'm doing, but it's the bond market, it's the stock market, it's the economy. There's a lot of moving parts that I try to stay in tune with. So look where we were. We were at about a 102.3, and I said, I'm going to see if this topples, and as soon as it's done, we're locking everybody. Because there's a propensity right here, we're going to drop down into this range here. And what did we do? We did exactly that. So we were here being proactive, having everybody on our radar. So as soon as we saw a reversal in rates, we started locking everybody. Okay, so that's what's going on with rates right now. The economic calendar. Let's look at the ADP payroll numbers from yesterday. Consensus was there was going to be 695,000 jobs created. There was 330, so half of that. Not a good number. And then we go into the initial jobless claims, which was pretty much in line with what they thought. So I'm thinking, okay, not a bad number there. Continued jobless claims, okay, it dropped pretty substantially. So because of this, everybody's thinking, okay, the economy is getting a little bit back to normal. Now, if we start to see employment numbers come in, of 1 million plus, you're going to see these mortgage rates spike even more. So that's why I'm like, guys, you got to sit right there. Don't sit on the fence. Work with us so we have your file in our hand. So when we see the rate reversal, we'll lock you in. Okay, so that's what's going on. Let's see what happened today in intraday, so I can show you what the trend is for today going into tomorrow. All right, so here's our trend. You can see we opened the gate and we just crashed. And then we reprieved back to about a 180 handle. Look right there, 180. We're teetering right on that line. And we closed below it. But what scares me is all these red candlesticks right here. That means there's more sellers than buyers. Why? Because right here, the employment number, that number, when it comes in, it's coming in at 7:30. It's before the stock market opens. It's before your banks open. It's before we open. So we are going to be behind the eight ball if this number comes in skewed one way or another, because we could come in tomorrow and rates could be up 1/4%. Or we can see a huge rally back up to these charts, these areas here. I don't think we're going to see either. I think here's my projection is, I think we're going to miss on numbers tomorrow, the employment numbers, and it's going to take a little bit of wind out of the sail here, meaning we're going to drop a little bit more, and then we're going to stabilize and come up to about the 101.8 handle that I was talking about. Okay, so let me explain this to you, how this works. Okay, what's Dan talking about when he's like, this is up and that's up? Well, that's up. That means mortgage rates are going up. That's not good. No, this is what's happening to the mortgage-backed security price. Okay, so to explain to you on how bonds work, is the price of a bond goes up, its yield goes down. There's an inverse relationship. Well, because this is a mortgage-backed security bond, as the price goes up, your mortgage rates go down. When the price goes down, it goes up. What we would look at is to see how much it's moving. So we need an adjustment here of at least 10 basis points or more to really affect mortgage rates. When you start getting 20, 25, 30, 40 points here, up or down, it's a pretty big move with mortgage rates. Okay, so that's what's going on right now. But the number that we're going to watch for, and we're at the edge of our seats, is basically the employment numbers. Why? Everybody's waiting on that number, and it's right here. So does the stock market know something more than we do? Well, let's look at it. Here's the headline here. Stock futures are flat ahead of key employment numbers. Okay, so everybody's on the sideline right now. I am erring on the side of caution. So what are we doing here? I'm locking everybody. Because I'd rather say, there's a lot of you guys out there that I've talked to, and I said, I promise you'll get this rate or better. That's what I'm living by. So, I'm leaning on the side of caution. So let's keep it at that way. So now, where are our rates for today? Well, great question. So here's we are. They are not affected yet with the movement in today's market. So this is rates as of yesterday. So you can see they went up a little bit, but yesterday we ended up the day down 6. So nothing major. Today we're down 27. So it's major. But here's what happens is Black Knight, it's a survey firm all over the country. They send out and ask all of the lenders out there, what are your rates today on 30-year terms, 30-year conforming jumbo FHA and VA? And here they are. Okay. So it says the current rate. Again, this is the national average. Yours might be a little bit higher than that, might be a little bit lower, depending on what your credit scores are, what type of loan you have, if you're paying points and all that other stuff. But at least gives you basically a baseline. 1 day, 7 day, and 4 week delta. Delta means change. So a day from 1 day, rates are up 2 basis points. What is 2 basis points? Well, it's 2/100ths. So it's 0.02. It's irrelevant. It will not make any difference in your rate. Okay, kind of the same thing right here with the 7 day delta. But what really makes this rate change is when you get a change of at least 0.10. So 10 basis points of what we call it. We're getting there on the week movement, the 1 week movement. Okay, the 1 week delta. Over the past month, we're basically there. We're down about an eighth, 0.125 on average across the board. You're going to see this wiped away tomorrow. I can almost assure you that. We're going to be back to where we were at square one. So is it Armageddon? Is the world ending? No. We're getting back to where we were, and we're getting back into the range that I expect us to stay stable through till the Fed really makes a move. So that's where rates are today. If you're in the process of buying a house, building a house, or refinancing, please let us know. We'd love to be your mortgage lender. If you're in a forbearance, I did a Facebook Live with somebody, a wealth advisor yesterday, and the main questions from attorneys and people that are on there is, what do I do with my forbearance? Can I refinance? Can I pull out cash? Can I pay out some bills? Can I do this? It depends on the mortgage program that you're in. So there's multiple programs: USDA, VA, FHA, conventional, jumbos, non-QMs. I need you to call us so we can give you your exit strategy. What are your best options when it comes to the ending of the forbearance? And they're all going to end at the end of this month, unless you have some really weird agreement with your bank. Tomorrow I'm going to go into detail with modifications. Please don't do that. Please don't do it unless you have to. And we're going to talk about that in a little more in detail tomorrow on, your bank might offer you a modification when you come out of forbearance. Please be cautious. Please let us know, give us a call, consult with us before you sign anything from your bank. How do you do that? And how do you reach out to us? Well, the best way to do that is go to therateupdate.com. You're going to come here. There's multiple ways to get us. One is you can click here and apply now. Some people do that, some don't. Here's a cool tool right here. This is basically, it's going to ask you questions if you're looking to buy a house or refinance. It's going to ask you about 10, 15 questions. Based on the answers to those questions, it'll guide us into the exact program that's right for you. When most people are doing, they're calling or setting up appointments with us. So 2 ways you can do that. Give us a call at 844-775-LOAN or set an appointment. Just click here. It'll open up our calendar. You can then pick the day and time that is convenient to you. We do all these calls either by Zoom or by actually a phone call. So please let us know the best way that you want us to reach out to you. So that is it for today, guys. Short, simple, sweet. Tomorrow we're going to talk about modifications, why you do not want to do that. So stay tuned, but have a great night. God bless. See you tomorrow. Bye-bye.